Hello, everyone. Happy Sunday. This is Simon with AvaTrade. Welcome back to our weekly webinar. Special welcome to the new people. And we'll start our webinar for this week. It's been an interesting week that just ended, and we have another interesting week to come, and that's we'll be discussing in a moment. So, a few things about myself. My name is Simon Friedman, and I'm a senior account manager with AvaTrade. My overall experience with trading is over 22 years. I was licensed proprietary trader back in New York for about 11 years. I did it on a daily basis. And after that, I moved away from day trading and started doing other things and mentoring and educating other traders. And as of now, I'm very happy to work with AvaTrade, and I try to share my experience and knowledge with our customers. The agenda of the webinar is the same thing. We'll be talking about indices, stocks, commodities, and Forex. And these are the channels that you can keep in touch with us and definitely use them. You have Telegram, you have Twitter, and my favorite YouTube channel. A lot of you are watching this webinar on YouTube. So please feel free to put likes. You can subscribe. It's a good thing to do. You can also put or click on that bell so you will get notified when new things are coming up. And we're adding new things on a daily basis. A lot of interesting, useful, educational materials there. And I suggest that you look into it. And before we go any further, a risk warning. It's important for you to understand. You can read a full document at avatrade.com. And I'll start with this screenshot that I took on the website called Market Watch. Why stock market investors keep falling for Fed pivot talk and what it will take to put in a bottom. And the face of a Fed chair, Mr. Powell. Now, we'll be discussing a lot of things today, and I will start, and again, for the new people, important for me to mention so you understand what's this all about. It's very simple. We're creating a plan for the week, so it creates a structure in an organized way. We're preparing ourselves for the upcoming week, so we try to understand what's happening, any upcoming events, announcements, and then we'll go through some technicals on the actual charts, and we'll look through the instruments and try to create possible scenarios for the markets in the upcoming week. So the big picture, let's start with the big picture. What's been happening? You probably heard about it already. There was a major event in the war between Russia and Ukraine. There was a major bridge that connects Russia with Crimea. It was a huge explosion, and it's still not clear who did it, what did it, how they do it. Some say that that will follow some actions from Russia against Ukraine, possible weapons of mass destruction. I hope it doesn't happen. We all do. And it's just the next event that creates more issues. And of course, everything with the war is affecting everything else and everybody in the world. If it's not directly for people involved in the war, that indirectly, economically, and everything else, as we all know. So that's what happened. Now, in the upcoming week, let's just finish what happened last week. We had NFPs, non-farm payroll, and of course, those of you that are trading for a while, you know that that's a major event and has a strong effect on the financial markets. So what happened? We had increase in jobs. We had 263 jobs added. We had unemployment rate falling to 3.5 to 3.5 from 3.7 the previous month. So I just want to quote something here that I took from from the same website, and this was written by Representative Barron's. It's a big financial paper or organization, and her name is Megan Casella, and she writes, overall, the report offers the clearest sign yet that the labor market is still showing remarkable strength, even as it has begun to pull back from its peak, with both tighter monetary policy and higher labor costs beginning to weigh on demand for staff. The trend towards slower growth will come as a welcome sign for the Federal Reserve, which sees a cooling of labor market as necessary step in its quest to tame inflation. However, the continued resiliency across the board means there is nothing in the September report to suggest that bank will alter its aggressive path toward on tightening monetary policy. So basically what it says that the data is not going to change the mind of the Feds. They will continue aggressive policy, and the only target on the only goal on the agenda is to bring the inflation down. And having this upbeat numbers with jobs and everything else just gives them more green light to do so. So last week we had all the U.S. indices falling sharply on Friday after the number came out. So we have Dow Jones Industrial Average went down 630 points, falling 2.1%. The S&P 500 fell 2.8%, and Nasdaq Composite was the biggest loser out of three. It lost 3.8%. And the biggest loser of the Nasdaq itself was the advanced micro devices. The stock went down 13.9%, almost 14%. So as we see, and this is nothing new, we've been talking about it for a while, then the interest rate affects mostly the high-tech companies, as they really are affected by the high percentage, whatever it could be borrowed money, it could be anything else, but those high-tech companies are being affected the most. And as you could see, the Nasdaq is being affected the most out of three indices. So let's go to economic calendar and try to see what's waiting for us in the upcoming week, and then we'll follow with the trading terminal. Now, on Tuesday, we have employment data from UK. We have a chairman from Swiss Bank speaking. That's on Tuesday. And again, just to remind everyone, very, very important, as you could see, it's a very short list of announcements. And the reason is that I only take the high impact announcements. So for those of you that would like to use economic calendar, which is a good thing to do for everyone, just to be aware of what's happening, whether you believe it or not, or pay attention or not. But as I always say, I prefer to know what's happening ahead of time, not to be caught by surprise, not to be caught in a crazy move up or down without knowing why, and so on. So that's why we're preparing ourselves by looking at economic calendar. And here I just take the high impact events, and you can filter it out. You can look it up and be prepared, especially for the markets that are traded by you. So Wednesday, very important FOMC meeting minutes. They'll be sharing with us what the September meeting was about. And Thursday, probably the most important event of this week, and that's the consumer price index. And that's the inflation measures or the inflation numbers that the Feds are watching for. And that's what I said a minute ago, that the main goal of Feds is to lower the inflation. And as of now, it's super high. And Thursday, it's going to be very crucial for us to see where those numbers are. We have also from Germany, we have the CPI numbers as well. Now, Friday, we have CPI numbers from China. We have retail sales and Michigan Consumer Sentiment Index, also very, very important. As you can see, it also marked as a high impact. So these are the things that are waiting for us in the upcoming week. So it's good for us to know. Now, another thing that's happening, it's not on economic calendar. I think it's important. We have a 20th National Congress of Chinese Communist Party, and that's next Sunday, the 16th. And that's important. We will, I guess, find out if the same ruler is staying in power or things are changing. And that's, of course, going to be affecting China, Chinese people, economy of China, and the world economy as well. So it's important to know about that event as well. So let's move now to the MT4, and we'll take a look. First of all, what happened last week? As I said, the major indices went down, and we'll start from that. So the S&Ps, and I just want to show you at the time of the announcement. This is when the numbers came out at 12:30 GMT. Take a look. The first reaction down, then we tried to hold it, then we went down again, and we closed pretty much on the lows. So that's pretty much no-brainer. We speak every week about it. Nothing changes. There's a strong downside pressure on the general equity markets, and it is continuing. So if you look at a daily chart, in general, the week actually ended up in green for US indices. First time after the 3-week steep fall and closing below the June lows. We discussed it last week. We did actually close the previous week. We closed below, and then we came to retest the level again, and we closed right a little bit higher than that low of June. Okay, so that's an S&P 500, that's Dow Jones, and that's NASDAQ. So if you take S&Ps, we're going to be using it. I use it as a general indication of the market, and that's a common thing that most of the traders globally are doing, as S&P represents pretty much a balanced collection of stocks that are involved in international business. So S&P is kind of a leading indicator of what's happening in the global indices. So what could be next for this week? Let's just try to make sense of it. So we moved this week. We had a pretty much strong move to the upside. We came on the surface above that June low that we came to retest, and then on Thursday we went lower, and on Friday when the numbers came, we just tanked and we came to retest it. And I shared with my team on Thursday when I was doing a daily market review, and I said that even if we are to move higher from here, which is not a strong possibility of it, but I shared with my team that even if we are to go higher, we must come and retest the June low for a very simple reason. As I share with you also every week, the levels are very important. And whatever was a support before changing to resistance, it has to retest it. So over here also was a support, then it showed the weakness, it went below, but went straight back up. So even if it was to run hardly to the upside, it has to come retest, say, okay, it is a support, let's try again. This is a common sense, something that you learn through the years. So we are here. Now what's next? It's a similar thing. We're not here to guess or have a crystal ball on the market. We'll be watching how Monday plays. So the same thing, if we are holding this June's low and we start building support around here, there's a chance that we might go higher from here. And of course, at least now we have this last week's highs as the next checkpoint. If we are closing on Monday below it and start building a resistance or just falling and retesting this low of the previous week, most likely this is the beginning of a next strong move to the downside. If you zoom out, you could see clearly why. We held nicely support here before making the crazy highs We came back in June. That was the June 12th, the week of June 12th. And the following week, twice we tried to break through it. We couldn't. And then we went higher. And now we're closing here. That means we're making a lower low. And there's the possibility of us continuing lower. Also, on the weekly charts, as you can see, we're sitting on the 200 moving average. So that's also important. And you have also something that I set up on the chart. You have a trend line. There's also a possibility that we'll continue lower until we meet this trend line, which is very easy. I connected the tops and the bottoms here. So we are trading in the channel. So there's a possibility. So we're going to come and test that trend line at some point as well. So as you could see, fundamentally and technically, there is a strong possibility of continuation. But we have to have a signal here. What's next technically at this key level on which we are currently sitting at. Okay, so that's as far as the US indices, pretty much the same thing. If you take Europeans, DAX, similar picture. We came down Thursday and Friday, and we are actually trading below the June's lows here. On FTSE, we actually had an up day on Friday, with the green day on Friday. So that shows a relative strength. As all the global indices are selling, the FTSE is really resilient here. It's holding its position. So if the index is having on Monday any kind of strength, FTSE probably be the strongest. That would make sense. French index, we are right back at this level of support that we touch here, and we played around it here. So the number is around 58.20 for French index. Nikkei, the same thing. We have a 2-day sell-off on the daily chart. We're below all the moving averages, and there's possibility of it sliding lower and retesting this previous support here around 26,230 to 40. China index, as I mentioned to you, the elections, so-called elections are happening next Sunday. So Chinese index is having issues for a while, as we mentioned. It never went higher as other indices, as they had issues with COVID. They having issues economically. They had to lower the rates a few times. So China index might continue lower this week into the end of the week. And I guess next Sunday, we'll have a better picture what's happening there politically and possibly economically as a result of that decision. So that's as far as indices. Now, every time I talk about China, as you know, you're probably used to it, I bring up copper as an indication. And as you can see, copper is very sensitive to what's happening in China and global economy overall, but China is very, very sensitive aspect for copper. As you could see, it's selling. So as the index go lower, we might see and retest the 3.3 on copper before anything else. And two currencies, as they call them, commodity currencies, Australian dollar and New Zealand dollar. We'll be talking about them when we get to Forex, but you could see it just quickly. They're also selling and they retesting the recent lows. So as far as indices, pretty much we'll wrap it up. It's a downside pressure, and the NFP on Friday put more pressure on it. And then this week, of course, we have the CPI numbers and consumer confidence and other few things that, especially the CPI numbers, that will be affecting the indices further. So let's move now to stocks, and I will start, of course, with the famous, let's call it couple, because they're really having issues, Twitter and Tesla. So here's Twitter. And if you remember last week, I mentioned to you that Twitter is not selling on the selling market. And I said that they're really hopeful for that deal to go through. And most likely, if that's the case, we'll see a nice move to the upside. And that's exactly happened. And that happened on Tuesday. On the 4th, take a look. Things were normal, nothing extraordinary. And then Musk announced that he's going ahead with the deal. And that's the last 30 minutes of the market. Uh, in my opinion, I think the SEC should really do something about it, because usually announcements like that should be done either before market or after the market. So the information should be accessible to all the parties, all the participants out of market hours, so they could prepare themselves. But this was happening 30 minutes into the closing of the market. So again, those that took chances, they were lucky campers, and that's what I mentioned to you, the relative strength. If on the falling market, the certain stock is not falling, that means something is happening here. And especially here, there was very clear that we are getting maybe closer to a deal or something, and actually worked out nicely. Now, Tesla, on the other hand, it's been really, really suffering. So it started on Monday. Monday, they reported they sold 343,000 vehicles, and they expected 360,000 by Wall Street. So the stock gapped down and continued sliding. And then, of course, with the announcement of the deal, stock continues to go lower. And Tesla actually declined 16% for the week. That's a big decline. It looks like Musk lost a lot of money. And some analysts, I did some research, some analysts are saying that the Tesla stock will continue selling until Musk is done selling the stock. And they said that it could easily drop another 10% to reach the price of 200. Just to remind you, before or right after the split, the stock was priced at around 300, 304, I think it was the day of the split. And now we are a lot lower, let's put it that way. So what's happening? As he announced that he's going ahead with the deal, he still needs to collect money to pay for it. So some analysts saying that he needs to sell somewhere between $2 to $5 billion worth of stock. And the thing is that earnings of the company are coming out on the 19th. That's only next week or the following week. And he cannot sell any stock until then. So it's going to be very interesting. Of course, the earnings are going to be important to see, and see the results and the shape of the company. And then right after that, he's going to have to sell. Some big chunk of stock. So that might push the Tesla down. And of course, the general market conditions are also important. If the market's going to continue tanking, all the stocks will follow, and Tesla included. So it's going to be very interesting. And also, I've read about some developments in this legal process between Tesla and Twitter. So basically, he announced that he goes ahead with the deal as originally planned. So the chancellor, her name is Kathleen McCormick, and she announced on Thursday that she's pausing that start of the trial that was scheduled for the 17th, and she gave Musk until October 28th to close the takeover, to finish the takeover. So basically, we have the earnings on the 19th, and then he has another 9 days after the earnings to finish the takeover. And basically, she said that, and she has power. Twitter was really, really pissed about it. They were really upset because they wanted the deal to be closed by the 10th, and she gave Musk time until the 28th. And she said if the deal is not closed, then she will have to reschedule the trial in November. So that's a tricky one, because I'm thinking there's kind of game over here. Is Musk really playing the game? Is he just trying to win some time? I really don't know. But these are the facts. So I wanted to share them with you. I know a lot of people are involved in this trading of Twitter and Tesla. So it's important that you have as much information as possible as you're making your trading or investing decisions. So that's as far as Tesla and Twitter. Now, we're starting the earnings seasons in general. So we have few stocks reporting this week, and that's going to be on Friday, the 14th. We have Citibank and JP Morgan are a few of them. So let's take a look. As I mentioned to you 2 weeks in a row, the banks are really, really suffering, and there's possibility of continuation to the downside. And this is the daily chart right here. We had a nice move as the market moved on Monday and Tuesday, and then we right back. So we could be retesting the lows of last week. And again, the earnings are going to be probably not so great. So as you could see, Citibank is moving lower. JP Morgan, similar picture. And I'll just show you other banks, even though they're not reporting this week. But Goldman Sachs is also selling here, and Bank of America is showing a similar picture to the Citi and JP Morgan. So we'll be watching Citibank and JP Morgan towards the end of the week, of course. And they're reporting before the market open on Friday. So I guess it's going to be a lot of activity on Thursday, especially Thursday afternoon, the second half of the trading session on these two stocks. Okay, let's move to commodities, and we'll start with oil. As I mentioned to you, there's a lot of things happening, Russia-Ukraine conflict. And of course, that puts a lot of pressure and uncertainty on the energy sector. And we had the OPEC meeting. They said they're going to cut production significantly. I think 2 million or something. And the futures reacted right away. And the whole week we've been really, really going higher on oil. And Biden and U.S. administration, they're not really happy because they were trying to convince OPEC to really, really pump the oil to keep the prices lower. But take a look on the weekly chart. This was a very, very strong week from 81 and a half to 93.27. Now, what's next? On the weekly chart, we'll just hit the 50-week moving average. On the daily chart, we are about to hit 100-day moving average, and it could be anything. We could continue higher. Again, oil, you can't just do technical analysis on it. There's a lot of aspects that are affecting. You have OPEC, you have war in Russia, you have other things, you have winter season coming, and so on. So technically speaking, we are having a nice move to the upside. I like to search for certain levels. So the first thing comes to my mind is this day right here. Sometimes the large candles create levels, as you could see, and I'll explain what I mean by that. You had a big sell-off. This happened on the 12th of July. 12th of July was a big sell-off, big range candle. You had a $10, almost $10 candle. So for some reason, it stopped here, right? It stopped at 93.57. So let's assume that 93.57 is the level that some buyers, some serious buyers were sitting, and they held the instrument from falling further. So we are approaching that level here. So 93.57 is about 30 cents from Friday's high. So let's see what happens. And actually, that would bring us closer to the 100 moving average here. Again, this move, it could be overextended, but it's hard to judge. As you could see, there's some crazy moves happened in the past, especially war-related. That's the February move when the war started. This is in 1 week, oil went from 94.5 to 130.5. That's insane. Okay, so as I said, you know, if we chose this level as a possible level of resistance, doesn't mean that that level will hold. That's just something that we might be watching. And again, the thought about it, that it looks like some buyers were sitting there, and then we flipped, so the support became resistance. And let's see what happens as we approach that. Okay, that's oil. Now, natural gas. Natural gas is acting weird, to say the least. Logically speaking, when those Nord Stream 1 and 2 got blown out the water, literally, it should really be affecting natural gas in a positive way, the shortage of it. But natural gas is selling. But as you could see here, historically, it has a tendency to pull down, play weak, and then shoot up. So at some point, we might see that as well. I'm not going to pretend there's certain things that I see here, because I really don't. The only thing I see here is on the weekly chart. Maybe we are getting closer to this $6 level, 618 level, where we stopped this initial advance on the way up. I really don't know, but we'll be watching it. And if you really don't see anything like in this situation, so we'll take one day at a time. And apparently we've been holding here. So if we are continuing lower, we'll be watching from this Monday and Tuesday levels of natural gas, and that's around 630. Now we close at 660 on Friday. We'll be watching how we're playing with this level. And if we are flipping to the upside, we're probably going to hit the 200 moving average and see how we play with it. As you could see, we tried. The moment we closed below 200 moving average, we're really kind of having a hard time breaking through it. And this was the last attempt on Thursday. We hit it again, but we closed lower, and we are continuing lower. And again, fundamentally, the Russia-Ukraine crisis should be adding more upside pressure to it, but it's not at this point. So we'll see what's next. Now, gold. Gold had a nice run at the beginning of the week. We came to retest the previous resistance. As you could see here, we actually came exactly to that point. And I'm happy when things are happening, so I can show you how really the levels are working. And take a look. This move to the downside stopped at this point, 1727.70, right? Then we broke through it, and then as I mentioned to you a few minutes ago, the support becomes a resistance. So we tried to really confirm it, and we did confirm that we couldn't break above it. So it's a solid resistance. Then we had a nice move to the downside, and take a look. In recent days, we came to retest this level. We came straight to the same level just to find that the resistance is still holding. Okay, and then we had 3 days to move. Now, what's happening here? We have something that I mentioned to you every week. The 10-year yields, they got really, really weak, and they give ability to gold finally to run up and dollar to go lower. Now, after a nice correction on those yields, they continued on Thursday, especially Friday after the announcement, they continued higher, and they put another wave of pressure on gold, and we came back to the level of support of this channel. So we came back to 1691 level, the one that I mentioned to you last week. And the similar idea. We are in the channel. We are retesting the support now after hitting the resistance around 1727, 1728. And let's see how Monday starts. We'll see what the yields are going to be doing. Are they going higher? Are they correcting again to the downside? And what the US dollar is doing. So this is gold. We're back to the bottom of the channel. And as you could see, it was accumulation, shooting higher, accumulation, shooting lower. Another accumulation is happening now. Okay, so it's going to be interesting for this week watching the gold. At least we know that this channel is working, and we're back to this channel after being much, much lower. The previous week was a terrible week for gold. So that's as far as gold. We spoke about copper, that with China selling and in general, economy being weak, copper is getting really soft here and it's selling. So soft commodities, we usually watch wheat. After hitting the target that I mentioned to you last week, we are in the correction mode here. We are slowly bleeding lower. There's a chance they will come to retest this 845 level, 846, 847. But judging by how it's really selling, at some point we might see a retesting of the resistance here. As you could see, we've been, since the sell-off here, been making higher highs and higher lows, and it's not changing yet. So the trend at this point is an uptrend. Clearly, you can even draw the trend line, and it's clearly showing. So what we need to see stabilizing here and maybe making another higher high here. Take a look. 1, 2, 3, 4. We might be making another higher high. And for it to make a serious move higher, nobody's expecting these highs here. But if we are to move significantly higher here to maybe $1,000 target, we need to see the same thing I mentioned to you last week. We need to see a closing about 930 and establishing a support about 930 on the wheat. Okay, let's move to Forex, and we start with dollar index, of course. And as I mentioned to you, as the market or as the 10-year yields went out of the correction and moved higher, so did the US dollar. But the nice correction here from the highs, and now we're on the way back. So we pretty much cover about 50% of this drop. Now, see what's next. We might go directly to retest the recent highs, or we might go and retest the support again. And this week is going to determine that. As we said, we have CPI numbers, we have FOMC minutes, we have other things that will be watched by Feds and the whole market, as I read to you in the beginning, and that picture of the Powell in the beginning slide. Every detail is being really watched and digested by the Feds. So the dollar has been strong and it's been happening. And as I mentioned before, as long as they're increasing the interest rate, the dollar will be continuing higher at this point. And so the dollar had a nice move 3 days to the upside. We mentioned last week that Australian and New Zealand dollar were the weakest. They are actually continuing to be weakest. Friday, we came to retest the low of the 28th of September. We held that level. So let's just draw the line there. The low here was 0.6362. And we went 10 pips lower and we closed a little bit shy of that number. So technically we closed below the recent low. So that opens a possibility of continuation to the downside. And it's really a strong possibility there. And of course, there was actually increase in interest rate, but less than expected. So it just added to weakness of Australian dollar. New Zealand dollar, similar picture, was sitting on this support here. And if you zoom out, it looks super, super weak. And I mentioned that to you last week. We're really approaching not the historical lows, but serious lows that from the beginning of the pandemic levels on New Zealand dollar. So we'll be watching actually how it develops this week. We might break through it, and the same rules. We should bring it, or we should see the New Zealand dollar goes lower than the previous support and start building new resistance there below the level. Euro and GBP were stronger, but they still sold. It didn't come back to this recent lows yet, but there's a lot of pressure. And just to remind you, the GBP had this nice move to the upside as Bank of England started to take measures of intervention and trying to really recover the currency. And they actually succeeded for a while, but then 3 days down, And let's see what's next on these currencies. Now, USD CAD, as dollar got stronger, it went higher. I think if the dollar is not showing a super strength and oil continues higher, we might see a pullback in dollar CAD, maybe retest these levels over here, the current level of support. If oil continues to be strong and dollar or US dollar doesn't move higher, we might see this pair retesting the recent support. And again, for new people, just to explain what I mean by connecting USD CAD with oil. Canadian dollar is very sensitive to oil, as Canada is one of the producers and exporters of oil. So oil prices are affecting the currency. There's a strong correlation there. So as oil goes higher, so does the Canadian dollar in a lot of cases. So in this case, US dollar was super strong the last 2 days, so it didn't affect that much. But as you could see on Friday, as the US dollar continues being higher, Canadian dollar regained some strength. So it was a little bit of a red day for US dollar against Canadian. But if dollar pauses this move to the upside and oil continues higher, we might see a pullback in USD CAD, something important to watch. That's it pretty much in the Forex world. And let's take a quick look at Bitcoin. Bitcoin is struggling to break the 20,000, especially as the dollar got stronger. And I think last week somebody posted on YouTube and we responded to it. There was a question, is Bitcoin going lower because of a strong dollar? And that was a good question. And I'll just repeat what we responded on the YouTube. Yes, Bitcoin is affected by the value of the dollar. So as dollar went higher, Bitcoin started having a hard time moving higher, and it was selling here. And also other things, it's very sensitive to the equity markets in general. So I could see, as you could see, as the market sold, Bitcoin also sold. So these are the aspects that affect. Of course, there are the fundamental things within the crypto world that's affecting it, but those two aspects are affecting the Bitcoin as well. You have the value of the dollar and the value of the equity markets. So again, we are rejecting this 20,000 on Bitcoin. We did close about it once, and then we came straight back. So if the market continues selling and dollar really regaining that strength or continues higher, we might come to the recent lows and retest this 18,200 level. It is a strong concrete wall of resistance in this way. It's not really breaking through it for some reason. And Ethereum, it's pretty much flat. It's flat, it's not doing much, and the only thing you could see at the 50 moving average just crossed below 100. It could be technically a bearish thing. So again, Bitcoin in the channel trading around 19.5. Okay, so I think we're going to wrap it up. And I want to thank everyone for participating. And just to put it all together, we have a very busy week. We have a few developments happening. We'll see, I guess, some news from Russia-Ukraine crisis as things getting more intense there. Hopefully good news. We'll have CPI numbers and other things from US that will be affecting the next decision of Feds, which is pretty much about 70% chances that the next decision, I think it's November 3rd, the next decision will be another 0.75% increase in interest rates. And we have Twitter, Tesla saga continues, and we'll be preparing for that. I wish everyone to enjoy the rest of the weekend, get some energy, get some rest, get some positive positive energy, and I wish everyone an amazing and successful and productive upcoming week. All the best, and we'll be back next week. Take care.